Hey traders, checking into the stock market today. Continued bear control with a lot of red out there. We're even seeing some weakness in some places that we weren't seeing last week. We'll look at that. And we're going to be looking for a short-term bounce in the near term. I'll show you what my criteria are to be looking for that bounce and the places where I'm going to be looking to trade. So before we get into it, we've got a new free ebook for you all, tips and tricks to avoid over trading. We'll put it in the description and the comments of this video. And a lot of people looking like this guy today. So we will explain the reasons why so many traders suffer from over trading, 3 tips to help stop, and how emotions can impair our judgment. Check it out. S&P 500 continued weakness. We saw weakness in crypto over the weekend. Recently, we've been seeing crypto really just die off and volume disappear over the weekend. Not this past weekend. Consistent drop down and perhaps a precursor to the broader market today. And we have that website, what is it, Weekend Wall Street, that we kind of can look to for some potential clues, but doesn't really mean anything. There's not significant money in play. There's significant money in play in crypto. And so I would be looking to crypto as a potential gauge on what we're looking for heading into Monday over the weekend. But a lot of weakness, and we're watching RSI levels and hourly downtrends. So as we know, we are not oversold on the daily. The 4-hour RSI is oversold on the S&P 500 and the NASDAQ. The hourly is not. It was another day today, and we've seen this. I mean, really the whole makeup of this pullback, which is why it's been so different, at least for me personally, is the big pullbacks we've seen recently. The CVID dump in 2020, 2018, the end of 2018. They were fast, hard dumps, real fast. RSI levels getting extreme, and then V-shaped bounces as we just clear out the order books real fast, like ripping a Band-Aid off. This one's a bit different, and these big bounces along the way, I mean, this big 3-week bounce, it's cooling off RSI levels, it's allowing for further downside. So the fact that the daily RSI has not hit oversold in over a month while we're seeing all this weakness is very notable. And if we look at the hourly today, we had little weak bounces, just little hourly bounces and some green candles. So the hourly RSI didn't really get oversold in any meaningful way. Look at the 5-minute time frame today. Look at the RSI. We did not hit 5-minute oversold conditions. I mean, we just barely kissed it twice. But how many times do we see 5-minute RSI drop down to 25 or 20 in just a regular trading day? And it's not happening on our weakest days, which shows us contained price action. Let the bounce happen. Let the breathing, let the market breathe a little bit. Let the RSI cool off and then right back down to fresh lows. So that's definitely notable, and that's what's been keeping me patient looking for bounces because we're not at extremes. My aggressiveness as a bounce trader matches the bears, and yes, big picture, the bears have been aggressive, but when you zoom in, you can see it's not this kind of free fall, waterfall drop. So on the S&P 500 futures chart, the 4-hour RSI right now is 26, and I can go back historically and look at what happened, where do we bounce from, essentially. And I can go back and look at a few years real easily and see, okay, we get around 20 and we bounce. We can dip under 20 and we have, but very, very briefly. And that usually is where we start to see a significant bounce take place. We got very extreme on the CVID dump, of course. But other than that, more often than not, if the 4-hour RSI is at 20, we know to be looking for a short-term bounce. So if we see continued weakness tomorrow and another red day, without cooling off RSI overnight, we're going to be looking for the potential of 4-hour RSI indicating to us, okay, now it's time to be scouting a bounce. And if we get red tomorrow, that's what I'm going to be looking for. I'll be keeping an eye on these 4-hour historical RSI levels. We know the NASDAQ has been weaker. Again, we're dropping to fresh, clear lows and getting follow through as far as our 2020 lows or 2022 lows right now. Same thing, the NASDAQ 4-hour RSI, it's a little bit more beat up down at 25. If you go back, we can dip below 20, but generally 20 is the area we're looking for a bounce. Red day tomorrow, and we're going to be approaching that level. RSI on the hourly, again, not extreme in any way. I fumbled a bear entry today first thing this morning. It's been interesting. Thursday, the bell rang, bears in absolute control from the first moment. Friday, bell rang, bears in control, 1-minute bounce, new high of the day, no trend changes anywhere. Bears in control for a solid part of the morning from there. Today, bounce pre-market, cooling things off. And we know we're looking for an hourly lower high to be the result of that pre-market bounce. And so then I was watching for a bear entry based off of the high of the day. This looked exactly the same to me as Friday. So new low of the day, bears in control. That's potentially our hourly lower high being set. We V-shaped bounce. I enter with a top fish play. I give some wiggle room knowing that what we did Friday, bull break with no trend changes straight into rolling over. On this pullback, I exited half of my position to remain protective. And then when the 1 minute trend change confirmed, I said, okay, well, this is a little bit different. This is different than Thursday. It's different than Friday. Maybe we get some more bounce follow through. And it also had to do with me being conservative and not wanting to start the week with a red trade. And in the end, I was too conservative because I stopped out. And granted, it was a pretty much a break-even stop out, but I shook myself out of a nice bear entry that would have done well for the rest of the morning. So in hindsight, what could I have done differently? I could have fully accepted that I might take a half-day loser on this trade. And what I could have done is exit that half and lower my break-even and get more comfortable and then re-enter on a new high of the day, knowing that the hourly lower high is most likely. Probably because in the back of my mind, I'm thinking, things are extreme. We're due for a daily bounce and not wanting to get caught on the wrong side once that daily bounce gets going. But today was not that bounce. And again, just anything under the high of Friday's bounce attempt of 310.86 was an hourly lower high. That's the other reason. We weren't close to that level. We got up to 306 this morning. So I was stopping out, and then I would have looked for another entry if we had gotten closer to that hourly resistance level. But in the end, a mistake, my kind of mistake where it's just money left on the table, and continued perpetual weakness. Hourly downtrends are our guides. Ever since the FOMC fake out reaction, every single bounce has led to an hourly lower high, and we know nothing will change as long as that remains the case. So what we have to see happen is a big enough bounce to break hourly lower highs and then confirm the hourly trend change to prove to us that this time is different. Daily is not oversold. Every time I look at these RSI levels, it's just in the back of my mind, it's a flashing signal. We can absolutely see another leg down. We can absolutely be red tomorrow. There's no reason we can't. But I will be interested in bounces if the 4-hour RSI on our futures heads down to 20. That's enough of a historical level that I'm paying attention. Microsoft had a key support break today. It was one of our tech general bulls holding out with Apple, holding well. We know Amazon, Facebook, Netflix, they've all dumped on earnings. Microsoft and Apple did not. But here is Microsoft joining Team Bear. Monthly bounce, topped out here with a little triple top, and now rolling over to fresh lows. So clear weakness, daily, unable to break resistance, and now we're breaking support. So Microsoft joining Team Bear, and Apple is key. Apple heading towards its adjusted level, adjusted for dividends, 149.88. If that level breaks, it will be a notable shift on the monthly, and the most important stock in the market, as far as weightings in ETFs, will be confirming. It'll be failing a monthly bull flag, and you could call it a monthly lower high and lower low. So that is a very key support level in play this week. If that holds, we're going to look for a bounce. And if that breaks, it's just another tally for bears who have a lot of tallies in their column over the last month. SMH, fresh lows. So it has been holding on better than QQQ over the past couple of days, but doesn't matter. You can hold on better and still be weak, and that is what we have. 222.82 broke, so 216.14 is the next level. And again, in this fear market environment, individual price levels for individual stocks and ETFs matter so much less to me because it is the broader market, SPY and QQQ, are going to dictate when we bounce. So it's very unlikely that an individual name is going to hold a support level if QQQ or SPY or both keep dropping. So in my opinion, SPY and QQQ are superseding everything as far as individual levels are concerned. I guess it's worth keeping an eye on and being aware of, but it's the big boys running the show. It's these major ETFs. Tesla, bear break of couple support levels, and now it is all about 700. If 700 breaks, a monthly downtrend confirms, and that would be additional pressure on the S&P, on SPY and QQQ, the ETFs, which Tesla has become a larger and larger holding in over the years. And so same thing as Apple. If this level breaks, big tally in favor of the bears for the broader market. And aggressive bulls are watching for a bottom fish. So if the NASDAQ and the S&P 500 get any kind of bounce going, we'll be looking for a higher low compared to 700, at least initially. Keeping in mind, again, so many names have a lot of space for daily lower highs to form. So let's just take SPY as an example. SPY can find a temporary bottom and then bounce. Let's say, what happens if we bounce 3% on SPY, finding a temporary, that doesn't even do a dent. We can bounce 5% and still be looking for a daily lower high. So just keep that in mind. Bears are waiting for daily lower highs, the next bounce. Patient bears are saying, well, I don't want to enter short down here, but next bounce, I'm scouting that lower high. So that is definitely important to be keeping an eye on, where even when we do get some short-term relief, tons of names will very likely form daily lower highs as a result of the next bounce that we see. XLV, fresh drop to a lower low, daily downtrend continues. Heading back down towards our recent 123 double bottom. That's a very important level. It's only 2% away now. Potential bottom fish there as well. But again, we would need to see the broader market bounce in time for that support level to hold. And we will be watching for a weekly lower high on XLV next bounce. There is tons of space for it. I'm also keeping an eye on utilities. Utilities weekly higher low is trying to shape up. They stood out as a lead bull sector today, just trading sideways the last 4 days. If the weekly higher low is set, it's going to be very notable to me if we confirm a weekly downtrend on XLU, and I'm watching for that on XLV as well. So a sector holding on really well recently, comparatively. And again, granted, it's generally a risk-off sector. Didn't want to confuse myself. Risk-off sector. So you might look at that and say, well, we could confirm a weekly downtrend, and that just means the broader market is bouncing. That remains to be seen. But keeping an eye out for a weekly lower high to be the result of the next bounce on XLU and XLV. Again, just determining the most likely scenarios. Let's say I'm looking at XLV on the hourly time frame. Oh, I can't get a trade. It's not clear. I don't know what to do. I can just write it down. I know that a weekly lower high is the most likely scenario next time we bounce. Write it down. Keep an eye on it. Wait for the trade to come to me. It might be in 2 weeks. It might be in 4 weeks. It might be tomorrow. Well, it won't be tomorrow. It takes days. But weekly lower high will be on watch. Financial sector had space for a daily higher low attempt. Couldn't pull it off. 33.84 support broke. Daily downtrend continues. So daily, weekly downtrend. We're heading towards weekly oversold RSI. And we look historically, and generally, that would be a good time to be scouting a bounce. Keeping in mind, it has gotten a lot more extreme in our one instance here. Otherwise, dips below 30 RSI on the weekly were generally short-lived, aside from 2008, of course. So again, RSI alone is not enough. It's just a clue. Like, okay, now I'll start looking in that direction. I haven't even been looking in the bull direction because of where our RSI levels are on the NASDAQ and S&P 500. IWM, clear big bear break. Again, leading the way to the downside is QQQ, growth, semiconductors. So IWM is a lead bear heading towards daily oversold, easily at fresh year lows. Again, lack of support in this range. 165.91 is a level before there's a gap to fill. Just another name where there's a ton of space for a daily lower high next time we bounce. The biotech sector is absolutely trashed. And it's down 18% in 3 days, let alone what it's down from all-time highs. So this is a name that I am looking to play a bounce on, but only if the NASDAQ shows me signs that a bounce is forming. Why am I looking to play this weak name for a bounce? Because I believe there will be more short covering on this name. In addition to bulls buying the dip, I believe the percentage gains will be bigger in the biotech sector. We've seen it plenty of times. Percentage gains on the way up and the way down have been bigger in both directions. and we are just absolutely trashed in full bear control. Highest volume day in a very, very, very long time. Potentially years. Dollar share volume, not dollar volume, but yeah, higher than the highest volume day during the CVID dump. That's meaningful. Is that a volume climax? No, we don't have any lower wick. I'm watching for it, but if I want a volume climax to be shaping up, there's got to be some kind of a lower wick or some kind of indication that it's a lot of bull volume as well. Hourly, very clear downtrend continues. And just, this is capitulation. I mean, look at us oversold on, we're getting oversold on the monthly. The weekly RSI is down in the low 20s. The daily RSI is in the mid 20s. We've dropped on the weekly 6 weeks in a row. So I'm watching for a temporary capitulation bottom, keeping in mind we can bounce 20% and be looking for a daily lower high. But it is going to be a top bounce watch for me this week. Doesn't mean I'm going to take the trade. We'll see if it comes to me and gives me a setup that I like, but it is on the list. The VIX, it's been notable to me that we have not been breaking out on the VIX. We've barely broke the high of Friday. Meanwhile, all of our sectors are extremely weak. Why is that? What's going on? Well, you could say, I don't know. I don't know is the answer. But speculation, you could say maybe longs instead of hedging, in other fear environments, long-term portfolios will buy volatility instruments to hedge their longs. Maybe they're just selling longs and not hedging. I don't know. But interesting that we're not breaking the high of last week while we are well below the low of last week. So just keeping an eye on that, watching for the potential of a short on the VIX. There was a nice short first thing this morning on a double top, and granted the bears didn't get much follow through, but just keeping an eye on the VIX, which is not breaking out as bulls would anticipate it would be with the amount of weakness we've been seeing here. We are under the high of May 2nd. Where's QQQ related to May 2nd? Way lower. And obviously it's not just QQQ that matters, but down 7%. Looking into the US 10 years. So the daily is shaping up potential consolidation. We've got a clear daily uptrend that's been intact for a long time now, 2 months or so. Keeping an eye on it. This pullback in the 10-year did not help the tech sector today. We can certainly say that much. QQQ saw no impact to this red. We're watching TLT, which is trying to get a bounce going. The daily EMA 12 is my guide there for full bear control, as is the daily downtrend, but a little bit of a shift. The dollar, bulls are tiring, it looks like, with these upper wicks. Granted, bears aren't doing a thing, but bulls are slowing a bit. Still a clear daily uptrend, still daily EMA 12. As long as those hold, the bulls keep their complete control. These are just things I'm keeping an eye on, just little pieces of the puzzle. Metals are extremely weak. A lot of frustrated metals bulls out there. This inflation environment, this is when we're supposed to be going up. And we've got the low being tested on gold. Silver already broke to the low. Clear daily bear flag confirmed. Clear daily downtrend as our guide. And the miners, big confirmation of the bear flag. So bears in complete control of the metals and the miners still. And GDX is another one. Tons of space for a daily lower high to be the result of the next bounce. Patient bears waiting for daily lower highs at this point, in my opinion. Oil. So a notable shift in oil today. Again, there were some initial red flags and bulls saved it last week, but this is now right back to a glaring big red flag. If you break an equilibrium that's been forming for months, bullish, and you only get 1 day, not even 1 day of follow through, a big upper wick, an inside bar, and then an inside bar bear break, that's a bull break straight into consolidation. And granted, we're still a daily uptrend, but that is not what you want to see. What you want to see is strength and continuation and conviction. And so 128 cents is a daily support level, but energy bulls getting a little bit cautious up at these levels. Still a clear weekly uptrend, still weekly EMA 12. It's not game over, but it's big enough. I mean, it's the most bearish day in oil in a couple months. And it's big enough for us to say, okay, we need to be paying attention for a potential shift in the sector character. So look at natural gas as well. That is a massive dump. This 2-day drop is way more significant, not way more, but notably more significant percentage drop than this 5-day drop. So this is the biggest 2-day drop percentage-wise that we've seen this entire move up. Does that mean it's a climax top? It absolutely could be. And I've been talking recently, if you're trading natural gas, if you're trading something that's had a trend for a significant amount of time, I mean, if this market environment has shown us anything, I should say, it's when you have a huge move to the upside, keep an eye out and give an attempt or two to try and nail a cycle top. And not saying this is it, but we got a whole bunch of space now for a daily lower high to be the result of the next bounce. And I was impressed with the bull's save last time around because that was a big pullback, 21%, and we did see that higher high. But here over 2 days, we've now got a 22% pullback in 2 days instead of a 5-day drop. So it's notable. It would be a potential. Let's go to the 2-day. It looks like a head and shoulders here, where if we do bounce and hold support, we then scout that lower high. So bears will be scouting a lower high in natural gas. And with the weakness we're seeing here in oil and natural gas today, energy sector, which has been a lead bull at all-time highs, big red day. So is this a shift now? And today just almost for energy, for commodities and the energy sector, today almost reminds me of 2 Thursdays ago when all of our sectors and commodities that were holding up well, healthcare holding well, commodities holding well, everything dumped that day. And today this is reminding me of that where, well, oil is holding well, natural gas is holding well, energy looks great. And then today, clearly a good chunk of money is leaving the energy sector. And we got an uptrending resistance line now to be keeping an eye on as the bull break lacked follow through. And as far as support, we can keep an eye on something like that. If we bounce from here, we'll be scouting a daily lower high to be the result of the next bounce on energy. Again, just the initial first little clue of a potential character shift in the sector. And we'll see if it ends up following through or not. CPI numbers are Wednesday. Keeping an eye on 4-hour historical RSI levels for the broader market. Keeping an eye on the hourly downtrend, which has been crystal clear. If we break hourly lower highs, we could say, okay, this is different than the last 3 days. And watch to see if the bulls can shape up an hourly trend change in their favor from there. But if we don't break the hourly lower highs, nothing changes. Biotech sector absolutely smashed. Only the most aggressive bulls have any interest in trying to play that bounce. And I hope you had a great day. Do good things.
GG.